Now putting the spotlight back to the markets on our systems. On Friday, the stock was up 5-6%. It's followed it up with another 6% up move. We've got the management joining in to discuss three key focal points. One, the Novigo deal. It's done at a fairly attractive EBITDA of 6 times, revenue and margin expansion, and further expansion into West Asia. Nitesh Bansal, CEO of our Systems, is joining us on the show now. Mr. Bansal, thank you for joining in. This is Rima here. First, if you could just tell us a little bit about the Novigo deal. Why did you go ahead and acquire it? And what are the kind of synergies and revenue accretion you see on the back of this?
First of all, good morning, Rima, and thank you for inviting me to this segment. As you said, we are very excited about the acquisition of Novigo, and it is a capability-led acquisition. It is designed to strengthen our position in the forefront of agentic AI revolution. By integrating Novigo's strengths in low-code, no-code, as well as their intelligent automation, we can now take enterprises from AI model engineering to autonomous execution under one roof. And clearly, it's not just about scale. It is a very high margin synergistic capabilities that we are acquiring that accelerate our clients' AI-led transformation journeys, where we now get the capability together with Novigo to design, orchestrate, as well as operate the AI-powered autonomous workflows at scale. Now, as we know that the clients' budgets have been moving over the last year or so from traditional IT spend to more AI-powered autonomous workflows, this is our move to make sure that we stand ahead of our competition and continue to deliver value add to our clients.
Mr. Bansal, then, yes, from the P&L perspective, what kind of value will it bring? What kind of synergies are you looking at in terms of revenues, your EPS? What kind of margins will it consolidate picture look like?
Yeah, so Sonal, combined, we stand to become almost a $240 million entity. Our system standalone is about 208, and then we acquire another $30 million of revenue. But more importantly, we've been operating at 17.5% EBITDA, give or take. But Novigo has been operating at plus 25% kind of EBITDA. So it's margin accretive, EPS accretive, and of course, value accretive right from day one.
Got that. And now for the combined entity with a base of $240 million, what is the revenue compounded growth we can expect going forward, Mr. Bansal? Is the company geared for a mid, like low teens kind of a revenue growth, high teens kind of a revenue growth?
We might have last quarter earnings as we released, we have organically, we have posted a 5.6% quarter-on-quarter growth, almost 4.4% in dollar terms. And we've seen this as a foundation of bringing the momentum back from while we have had last 7 quarters of steady growth, but the momentum was lacking because of the market conditions, etc. We're bringing the momentum back. Large deals are back in. AI is actually helping us win more deals and differentiate in the market. Novigo, on the other hand, has posted almost a 44% CAGR of growth over the last 3 years. And this is largely due to their positioning, both specifically in the Middle East market, but more importantly in the end-to-end automation play that they bring to the market. Combined together, very confident that not only our momentum will provide us tailwinds, but together we would be able to lead our post-market leading growths in the coming quarters.
Mr. Bansal, Novigo has around 47% revenues coming in from the Middle East. You have not had that much exposure earlier in that particular region. How are you planning to see expansion in that particular place? And also, will you see some cross-selling opportunities in Middle East itself?
Absolutely, Sonal. Thanks for asking. Actually, we didn't have any presence in the Middle Eastern market, and it's a $25 billion target spend in the market. And with the opening up of both the UAE and the Kingdom as for international markets, I think it's a great opportunity for us. Novigo has very strong presence in the Middle East with 3 of their founders based over there who run the market. So we are going to obviously give them more and more freedom and ability to operate, combined together with all the cross-sell opportunities that we bring together because of the capabilities that our systems bring to the table, deep data engineering, deep product engineering capabilities, and combined with their presence with the enterprise clients and ability to do deals in the market, we absolutely will have great synergies in the Middle Eastern market for the combined entity. And the other way around as well, as we take the agentic AI solutions to most of our customers, this would be a rapid expansion for both sides.
So now for the combined entity, Middle East would be 5-6% of your revenues?
Middle East will become, yes, Middle East will actually become approximately 2 to 3% to begin with. But as we continue to expand and grow, it should tend towards those kind of numbers.
Okay. And how will you fund it? You've spoken about taking on debt and internal accruals. What is the current debt and cash in your books, and what would be the debt you're comfortable with?
So we are normally, as you know, services businesses, especially tech services businesses, are cash generative. We have almost 200 crores of cash on our books. We have decided on the funding based on what's best from a capital allocation perspective as a combination of internal accruals and debt financing. So as you know from the public release, we're paying approximately 400 crores upfront as cash, and we'll be financing that as a combination of 125 crores through internal accruals and 275 crores we're taking debt as NCDs, which will be listed on the stock exchange.
Okay, all right, Mr. Bansal, thank you so much for joining us and telling us about the new acquisition that the company has made and the outlook going forward as well.